Hi guys, welcome to Pauper Trader. We've got a new series coming up. Got a few things going on actually. The website's just launched, so I'll just put a link in the description. The new series I'm going to be doing common trader problems. So when people get into trading, you know, there's generally excitement whether you're trading stocks, crypto, forex, any market. You only have pound signs in your eyes, dollar signs, currency signs, crypto signs. You just want the money. You think that it's just going to be a nice path to the riches from the financial markets, and then you'll be smashed in the face several times, time after time after time. And most people won't learn. They won't learn from any of their mistakes, and they'll just keep on getting slapped in the face until they quit. And remember, over 90% of traders quit. And for me, there's many reasons, but I believe one of the main reasons is that when people do trading courses, or whether that's a free course online or pay £10,000 to learn to trade, or some of these other criminal companies, because that's what they are, they're selling dreams to people. If they told you the realities of trading, they would never extract the money from you. It's simple. If you were told what the journey's going to be like that you go on, you ain't gonna do it, because believe me now, it's easier to set up a business selling things on eBay and Amazon, and you're going to make more money in the first 3 years. You're going to make more money doing that than you are from trading. So obviously it's not the case for everybody. Some people can make money from the markets, you know, pretty much straight away, but it's very, very rare. It took me 3-4 years before I was consistently extracting money from the markets. There's some, you know, famous people on Twitter, traders. I wouldn't say famous, but they got, you know, a few 100,000 followers. One of them, Tom Dante, 7 years before he became profitable. So don't think that you're just going to come into the financial markets and take money from it because you've seen people on social media driving fancy cars and wearing designer clothes and just easily taking money from the markets via their phone. Bullshit. So I'm going to cover a different problem with every series, with every episode. So basically, the non-trader is wired in a way to think in a way that gives money to the financial markets. So when I first started out, what I know now, I realised that my thought process was completely the opposite way when I first started trading. Everything that I did, I should have just done back to front, because, you know, the financial markets have been going for, you know, 300-400 years. So they're a finely tuned tool to extract money from the uneducated and unsuspecting trader. Now, by saying uneducated, I don't mean, you know, you can't do maths, or you weren't very good in school, because I know rich businessmen who are shit at trading, and they're not uneducated. They're very well educated. It's just that it's a completely different skill set. You have to rewire your whole thinking before you can extract money from the markets, and that's why it takes so long for people to gain the experience to take money from the markets. So the aim of the series is just to try and get traders to think differently. Just open your minds, allow yourself to think differently, because remember, 90% of traders lose money. So think differently. I'm gonna, you know, dispel a lot of these myths as well, like the risk management myth. It's one of the things that pisses me off more than anything is, oh, you've got to have a 2-to-1, 3-to-1 risk reward ratio. The way that you think about risk management and the way that it's sold by these trading companies is bullshit. It's a comfort blanket that they wrap you in so you don't fear the markets, so you don't think that you can be hurt by the markets. When most people fail not because of their risk management or their poor trading. They fail because they just lose the plot. They never fail because, oh, I've lost 20 trades in a row. They fail because they don't they don't take a loss, and they keep adding to a trade, and they just blow up. They just lose their minds. So the way risk management is used by a successful trader is completely different to how a new trader thinks that they should use risk management. Your risk management will be just death by 1,000 cuts. It'll just be a loss, diary entry. Oh, look, another loss today, 0.5% down. Next day, oh, another loss today, until you can't sustain that strategy because you don't get anything from it. So in one episode, I'm going to cover risk management and the way that you should be looking at risk management, because it's for me, it's one of the main things that kills traders, even though they think it's protecting them when it isn't. So when I talk about needing to rewire your thinking, what are the financial markets? Well, the financial markets are a crowd thinking, basically. So you've got people active in the markets buying and selling. So the market is a representation of a crowd's emotion. So this is why, if you think, oh, I'll put my stop loss here, do you think you're the only person who's thinking that? I'm sorry, but the other 90% of traders are probably thinking exactly the same as you. And that's why your stop loss will be taken out. Because the market is just the thoughts of the herd, of the mass market. It's real human emotions just tracked by price charts. So some of the problems that we're going to be going, some of the episodes that we're going to cover. So revenge trading, adjusting to trading after you've quit a full-time job, repeatedly making the same mistakes over and over again, actually confirming you have an edge in the market, trying to line up fundamental analysis with technical analysis. People lose their minds with that. It's a lot simpler than you might think. FOMO, fear of missing out, that'll be a fun episode. Overtrading and losing profits. So every time somebody has a bit of luck in the market, they get overconfident, they give it all back. See it all the time. Deviating from your plan or not having a plan. A good month followed by a bad month, just covered that one. Blowing accounts. There's a few things that you can do instantly which will protect you from ever really blowing an account. So we'll cover that. How to trade with a full-time job. It's possible. People build up good trading histories while they're trying to get places at prop firms on trading floors. So it can be done. Trading in a community. This for me is a bit of a bugbear. I don't fare well in trading communities because if I see other people's trades and setups and opinions, I get affected by it. So I don't do it. So screen watching. It's important to get a lot of screen time in when you're first starting out, but eventually you need to wean yourself off it because it will drive you, watching price move up and down, it will drive you insane, and it'll make you take actions that are not from your mechanical strategy. So you'll be trading from emotions, basically. Over risking, this is a big one. Obsessed with stop loss placements instead of looking for better accuracy. So this is a bit of a bugbear for me as well. I discussed this in the Telegram channel today, which I'll put a link in the bottom as well. It's if you have poor trading accuracy, but you think that, oh, I need to improve my risk management and my stop loss placement, you don't. You need to improve your accuracy before you can base a risk management process on your trades, because if you're getting poor entries every time, your risk management is skewed, if you know what I mean. If you're getting 20 pip drawdown on every single trade you enter and you're going for a 30-40 pip stop loss, you've reduced you've only got 10-20 pips to play with. Do you know what I mean? Because you're always getting the drawdown, so your entry the trade entry has got to be one of the best skills for a trader, in my opinion. It's more important than risk management. And a lot of people will jump in the comments saying that that's a load of rubbish, but then these people are probably, well, they're definitely not successful traders trying to tell me how risk management is more important, even though the risk management is probably a thing that's killing them, because they don't really understand. They understand what they've been told by somebody who sold them a course. The reason why you started trading, so this is going to be the first episode. It's going to hold you back because you got into trading for the wrong reasons, and your unrealistic expectations are definitely going to hold you back. So, trading what you think is going to happen is another big thing. You'll hear me bang on about that all the time in the Telegram channel, is because you're new to trading. Who are you to think that you know what's going to happen in the financial market? It's an insult to people who've been trading for years. So you only trade from a mechanical strategy. It's the only way for you to take money from the market. It's the same for me. I don't think I'm good enough to think what's going to happen in the market, and my thought process can take money from the market. I'm not a multi-100 million pound algo. Thinking trading is easy because you know somebody does it. This pisses me off. I've had a lot of people, especially people I was in school with, assuming that because I did it and I wasn't the best in school, that they're more intelligent than me, that they can make money from the market easily. Well, how's that going for you? Being successful in business means you're good at trading. Doesn't. We'll cover that. Emotional intelligence. This is one of the biggest things you need to become a trader. Emotional intelligence. Being able to execute your strategy time and time and time again without being affected by your emotions. I'm going to do a whole episode on journaling as well, but journaling isn't just about recording your trades. It's recording yourself and your emotions and things that trigger you. It's very personal to you. Fear and greed. This is a big one. I never realised that greed is more powerful than fear, but I'll go through scenarios which make this plainly obvious, and it's a minefield, but we'll cover it. Thinking you can come up with a way to cheat the market. I always get people saying, "Oh, if I do this and I double up here and I average in and I average out, or if I don't use a stop loss, the market always comes back." And you if you think that you've invented something that hasn't been tried before in the markets, you're completely wrong. You're giving yourself a bit too much credit, unfortunately. I'm sorry about that, but there's nothing that you can come up with that hasn't been tried before. If there's a cheat to the market, it's only the only people who've got that are huge funds and banks and institutions. Not being aware of risk flows. This is, to me, is massive. If you don't know what risk flows are, you shouldn't really be trading in the market, because when risk flows occur, technical analysis goes out the window. It does not work. It does, but it depends what's driving the market. If you can find what's driving the market, if it's the US stock market, you need to find when that's going to come to a level which could give a bit of respite in the other markets. Underestimating your ability. This is a good one, because when people are failing in trading and I tell them to just do your analysis and then leave it and then come back after a week and check if all your levels and zones work, they all worked. So the difference between an analyst and a trader is massive. A lot of people can call the market and moves and stuff, but actually using that information to take money is a completely different thing. But most people's technical analysis is pretty good. It's just that they can't get their trading results to match their technical analysis. So there are things you can do to improve that. Wanting excitement and action from the market, that's always going to end in disaster. We'll cover that. Creating a trading social media account. This one gets to me as well. I'm going to cover this because there's a thing called trading your P&L, which is basically you're trading the numbers and you're trading the figures that you want to achieve, and you're looking at your money rather than the charts. And it's exactly the same. you trade in your P&L, you trade in your Instagram account basically, and I'll go into that in more detail. So that's it. That's everything I'm going to cover, and I'm gonna get into the first episode in the next couple of days. But you know, we've got the website launching, we've got the podcasts, the channel which I run now. It's £10 a week, and if you join that in this week, it's going to be £10 a week for as long as you want to stay. It's billed monthly. So there's a link in the bottom. I'll going to be covering all aspects of technical analysis. You'll have a members area on the website to go through all the technical analysis training videos, and I'm just going to tell it like it really is. And you know, I think if you do a few months in the channel with me, it'll make you a much better and safer trader. And that's I'm never going to sell it again. That's it. It's starting this week, so come and join in. And that's it. So have a good new year. Get ready for a good year of trading, and remember, trade safe. Cheers, guys.